shitcoin.com show. The guys sit down with guests to chit chat about crypto. It's time for the shitcoin.com show. Let's all not get tracked.
Welcome back to the shitcoin.com show, everyone. So as I mentioned last week, we are starting with some stellar guests in the coming weeks. And the first one that we have up is Mark Lamb from CoinFlex. Hey again, Mark, how are you?
Good. How are you guys?
Pretty good.
Fantastic. I'm still on a undisclosed island hiding from this virus everybody keeps talking about.
It's going to kill us all.
You're not hiding at all.
I'm not hiding at all. I'm on a disclosed island.
Well, so Mark, you were on, I don't know, how long ago was it now? A few months ago now. But now, since then, you guys have been launching a bunch of stuff. So you kind of seem to be doing a lot of firsts. So I know when we were speaking before, the first physically delivered futures, but now it seems like, the firsts are coming quick. Can you tell us more about this flexUSD thing, which you guys have just launched?
Yeah, absolutely. So flexUSD is part of our foray into the interest rate, borrowing and lending and stablecoin space. And it's really a one-click way to tap into a lot of the interest rate and borrowing products that CoinFlex is launching right now and has launched and will be launching, and just earn yield from the trading that's going on at CoinFlex, the people that are buying perps and perpetual futures contracts and paying above the market to do so and paying funding on their contracts. And so there's a market out there that's that's trading derivatives and paying premiums for derivatives. And right now and historically, hedge funds and crypto traders have been able to buy spot Bitcoin and sell perpetual futures and kind of earn a very safe yield on the premiums. But this has not really been accessible to normal passive users or people that are not running algo funds. And so now we're just making that same return available to the general public. And because it's a physical future, you have no risk of it being a negative return. On BitMEX, on many of the perp exchanges, you can try to collect this perp funding, and then sometimes you end up losing money. With a stable coin, it's very important that it's always worth $1 or it's earning something on top of that. And so this will either pay zero or will pay a positive rate of interest. It'll never go negative.
Yeah, what is it with with perpetual futures versus the settled ones? I was always told that if I want to hedge a position, so say I'm holding a Litecoin and I don't want exposure, then I can short it on the futures. And I was always told by you and others to stay away from perpetuals because the interest rate can be very high and it can also be very volatile. How does that work?
Yeah, so because the perpetuals rely on this funding mechanism that's every 8 hours, and it's not possible to do a complete arbitrage on that funding mechanism. So the way you would do it is you'd buy Litecoin and then you'd sell Litecoin perpetuals while the contract is at a premium. But if it's at a discount, you suddenly need to do a bunch of extra trades in order to make sure you don't end up paying money. And if it's at a discount while you're sleeping, or you're not an algorithm, or you don't want to pay slippage, and that slippage might cost you more money if you're constantly flipping between long this, short that, short this, long that, then this kind of mechanism will sometimes net you some money and sometimes cost you some money. And the funding rate is variable. It changes every 8 hours. So it's an unknown funding rate. What we're trying to do is make perpetuals easier to use, because if flexUSD succeeds, and that will result in lots of people putting their dollars to work in our repo markets, and that those dollars being put to work in the repo markets will effectively clamp funding. So, and then we also have Flex BTC, Flex ETH, Flex other assets. And these will all have an effect of clamping the funding rates and reducing the funding rates for People that need to hedge commercial positions like you guys. You guys might buy some Litecoin, hedge it in perps. Perps are a very efficient way to hedge it because it's it's a very short-term instrument, unlike a quarterly future. But they're an unknown instrument because the funding you pay every day, sometimes you might receive, sometimes you might pay. It's always going to be unknown. There's that uncertainty. So we're trying to give people less uncertainty and help make the funding rates less volatile. Traders may also not care about the volatility of the rates, but passive investors really like earning them. Right now, lots of people are basically lending out $20 billion or 22 or $23 billion to Tether and Circle in exchange for stablecoins, and they're earning zero interest on all these dollars and all these stablecoins. So flexUSD right now is paying kind of between 6 and 10% annualized.
Shift with side shift AI. Good job.
And what do you think about Flex BTC? Because I was, someone actually asked me this week, and it's someone we can call a normie.
Yeah.
They had someone pay them BTC for service years ago, and now suddenly they have like $50,000 in Bitcoin, which to them is a lot. And yeah, they want to put it to work, get some free money for their money. What interest rate do you think they could expect on Flex BTC? I mean, feel free to guess.
Well, I don't know. I think it'll be lower than the dollar rate, but probably 2 to 5% is pretty reasonable. But we'll see as that market grows. The cool thing about Flex BTC, and this is true with Flex USD as well, is you can also use it on the ETH and BCH ecosystem. So they're all ERC20 tokens and SLP tokens. And so what that means is, hey, you want to have your Flex BTC or your Flex USD and then go yield farm with it? Great. There's a bunch of projects that are coming out that will be supporting yield farming for these assets and various forms of trading for these assets. When that happens, it means not only are you earning the interest, but you're earning the tokens as well, and the incentives that these yield farms are putting out. So yeah, I mean, your guy has some Flex BTC. He might earn a couple percent with Flex BTC, and then he can earn more if he farms with it.
And also, I'm guessing the fact it's tokenized means that you can literally hold these in your own wallet, right?
Yeah. So you go to BlockFi or any of these types of lending companies, and you go to withdraw. It's going to be a couple days, and who knows? You get nervous. People are afraid. They want to hold their own keys. You hold Flex USD, you've got it. If there's a redemption issue on CoinFlex, you go somewhere else, you try to sell it to someone. Worst case, you're going to get a price for it. I mean, there's a fundamental difference between holding your own keys and an asset where you're just privately lending to a company where they're not giving you anything in return. So this is an actual hold your own keys and collect yield while you're holding your own keys. And we think that's just a fundamentally different scenario. You can use the lending instrument as a collateral on CoinFlex. So for one, you can margin trade while you're earning interest.
And how does this work with FlexCoin?
Well, every trade on CoinFlex is pretty much paying fees in FlexCoin because all the traders know that they're getting 50 to 70% off by spending fees in FlexCoin. So what the cool thing about FlexUSD is it seems like, oh yeah, I'm just getting this yield, but actually what you're really doing is you're contributing very, very important liquidity at often cheaper prices than it might otherwise have been provided to our repo market. And so FlexUSD is launched, our volumes went from 30 million to over 100 million a day since the launch. That's not the likes of many of the derivatives exchanges in the space, but it's a big growth in about a week. We think that as the AUM of FlexUSD goes higher, this is just going to lead to more and more volumes for CoinFlex. So FlexUSD is not, it doesn't receive FlexCoin. It's not directly tied to FlexCoin in any way, but it increases CoinFlex's volumes, and that should increase the value of FlexCoin itself.
And you mentioned repo markets there. Can you explain that a bit? Because for me, I don't really understand exactly how it works. I'd love to understand it there.
Yeah, the cool thing about the repo market is it's a market that trades $1 trillion a day, but most people, even in finance, don't understand how it works. So if you're a brokerage firm, or if you're a basically if you're a hedge fund, if you're a big trading firm, you can't trade repo directly. You have to be basically one of the largest brokerage firms in the world, or a bank, or the Fed. And so repo is a short-term borrowing and lending market, basically. It's for collateralized borrowing. So you give some sort of security and you get dollars. And it's a kind of an overnight borrow with a variable rate. So it's kind of like a perpetual swap, in that there's a variable rate, but there's a physical exchange of one asset for another. And the idea is they're repaid the next day. And in practice, it's mostly not repaid the next day. It's mostly rolled over and over and over again. But basically, these one-day lending activities, where you're borrowing for one day, form the basis of the global lending ecosystem. So you can repeat a one-day loan for a month or 3 months, and this is how lots of activity gets financed, from people people depositing treasuries and borrowing dollars, and depositing other assets and borrowing dollars. And then this is kind of how brokerages borrow, hedge funds borrow, through lots of intermediaries, but they're borrowing from the repo market. The Fed is pretty much the biggest lender in the repo market. And so what we're creating is kind of an alternative infrastructure, where instead of the Fed, you've got flexUSD. And as a repo market, we have there's a lot of people in crypto today that have Bitcoin and want to borrow dollars. So these are trading firms, hedge funds, miners have this. Lots of people want to deposit Bitcoin collateral and borrow dollars. And so there's really a big need for repo. And right now, the only way they can get these dollars is going to a big borrow lend desk and saying, hey, can I borrow some dollars? And it's a slow transaction, it's manual, it's settled, in at least an hour. Whereas with this, one click, you can borrow $1 million. So on our repo market, there's several $1 million of liquidity within a couple basis points. There's probably $1 million within 1 basis point. And so you can borrow $1 million with Bitcoin without talking to anyone. And you just one click, withdraw the dollars off the platform. So there's not a lot of there's not any lending platform in crypto that'll let you do what we're allowing you to do. And it's a activity because you're fully collateralizing with Bitcoin or with some other asset. So we're margining in real time, we're having full collateral. It's a very, very safe activity for us, the exchange, for flexUSD users as the synthetic lenders effectively. And it's very useful for these borrowers because their alternative is paying, a much higher rate to a lending desk. So yeah, it's basically repo forms the basis of traditional finance, and it's already, borrow and lend is already a big, big part of crypto. There's probably 5 billion or so, maybe closer to billion in total across the borrow lend desks of the crypto world that's being borrowed right now. We think that's easily going to expand to 80 billion. And we think the only way that expands is through central limit order books rather than kind of these OTC clunky operations that are happening right now.
If I don't know if you're going to do this for the shitcoins. I'm guessing you might. If I have BTC and I need I need $100,000 of Litecoin.
Yeah.
You already know my use case. I actually need the Litecoin temporarily. So,
okay. And you want to take it off platform? Yeah, you can do that with us.
I want to take it off platform.
Yeah.
So would I then?
So we have 20.
Would I then be putting in my BTC and borrowing Flex, say LTC against that?
No, you're borrowing regular LTC. The repo markets are all denominated in the regular asset themselves.
Oh, okay, I understand.
They're they get funded and supplied by the Flex assets and normal users. Anyone can trade repo. It's the only repo market in the world that anyone can traditional repo doesn't have this. But yeah, right now we don't have Litecoin, but we have 20 different coins, and all of them have repo markets. And so you can borrow a number of different assets. If you were doing it with Bitcoin, you'd do 2 trades. You'd sell Bitcoin repo and buy the other coin repo. And we can list Litecoin immediately, and then you'll be able to do that with Litecoin.
And how much should I expect to pay for this loan?
You could even get paid. So if you borrow Bitcoin right now, you'd probably get paid 7 or 8% annualized to borrow Bitcoin.
That's confusing.
Yeah.
Oh, it's because the yield is higher on the.
Exactly. Yeah. If you put in dollars and you borrow Bitcoin on CoinFlex, it's the only platform, it's the only borrowing platform and place you can borrow in crypto where you can borrow. So, and we're going to have an interface to do this, but right now you can get paid to borrow Bitcoin with dollars.
So that would mean that certain coins would be pretty tough to borrow, because certain coins will not really have any interest, because the only thing you can do with it is just sell it for a different crypto.
Well, I think what it'll mean is the interest rate for Bitcoin to Litecoin will be a calculation between the Bitcoin rate and the Litecoin rate. And you might pay some on the borrowing of dollars with your Bitcoin, and then you might earn some on the Litecoin side. But it'll end up with some blended rate. I think probably 5 to 10% is my kind of blind guess. But yeah, you know, it's not terrible. I mean, you're going to get some back, and that rate will go down over time as more people buy Flex assets, flexUSD, Flex BTC, Flex LTC. Then the rates go down over time, and the borrowing scales up. So.
Pretty interesting. I think it's, I imagine people watching this will be like, like some light bulbs going off.
The nice thing is, for anyone watching this, you don't have to understand our repo market at all. You can understand as much or as little as you want. You can go in and read the documents online. You can ask us questions. You can come to our Telegram, ask questions there, or the Flex assets and let the magic happen for you, and let the robots work for your money, and just earn the interest passively on the blockchain directly to your wallet. So it's all transparent. Everything that's going on, unlike a lot of these other platforms, everything that's going on is fully transparent, but you don't have to understand it all in order to participate.
Very cool. And I guess, you mentioned it there where you thought kind of things were going. From you guys, I guess, do you have any predictions? Now it seems to be a lot of this DeFi stuff kicking off. And where do you see this going? I'm intrigued to hear what you both think about that.
Yeah, I'm interested in Andreas, but I can go first. I think DeFi is going to continue to become more and more useful. I think the speculative wave has kind of come and gone, and that will hopefully be healthy for the ecosystem. There's a lot of stuff that has to get washed out every cycle. So have we finished the bull market? It feels like it, of DeFi at least. I think there's a lot of stuff that's going to get built now. You know, a lot of people have capital. They've kind of made a bunch of money from DeFi. There's a lot of long-term investing they can do with that. Hopefully they do. The projects that have long-term commitment are likely to succeed. And there's real utility there. You know, the exchanging of assets in a decentralized manner, the borrowing and lending in a decentralized manner. I mean, these are things that compete with my business and Andreas's business, but there's also a collaboration, right? Flex assets can become part of DeFi. So we want DeFi to succeed because we want crypto to succeed, and a growing pie kind of works for everyone. In terms of what's happening now with Bitcoin leading the rally and this kind of very close approaching to all-time highs, I really have no idea, but it just seems like lots of different hedge funds are aggressively trying to buy. I think there's a risk that they're trying to buy to mark their portfolios up until the end of the year, where they can lock in some unrealized gains and collect a 2 and 20 off of that mark price without having actually sold. But but people are also aware of that, so they may front run that type of eventual selling that goes on. So it's going to be an interesting market, I think. What do you think, Andreas?
Yeah, it seems like people are really into Bitcoin now, and everyone's everyone's conceded. Lightning is conceded. No one cares. Bitcoin as payment is completely gone.
Yeah.
And no one seems to be working on that.
And
when's the last time you heard the word BitPay? I mean, I don't even know.
Yeah. I mean, it's kind of strange and sad, but that seems to have gone without there being a lot of remorse from Bitcoin holders. And maybe it's because the price is going up. So why get upset? There's no need to be upset if the price is going up. But I do think it's sort of dangerous to overlook that, because look, this is a monetary network. The use for money is transacting. Storing value is great, but you can do it in stocks, land. I mean, if the measurement is storing value, then you're competing with every little other asset that has a price. You're competing with Tesla shares. You're competing with Chinese bonds. So, but if we're competing on transacting, I mean, crypto's got some properties that, at least for certain use cases, it's just better than anything else in the world at. So, yeah, it's unfortunate that Bitcoin has kind of given up on that. But I mean, we've got BCH, we've got ETH, we've got plenty of other coins that seem focused on it. Hopefully that works out. But yeah, definitely on the BTC side, that's been a kind of macro hedge funds have taken over, and the gold 2.0 narrative has kind of taken over.
Yeah, and I mean, if that is the narrative we're going with, which is store value, and then you can call it like gross settlement, which basically means payment, but only for rich people, and mostly just between funds. And I'm fine with that. Sometimes you create a product and you give it to the users, and they use it for something else than you thought, and that's fine. So I think if it is gold 2.0, then we're just going to see more and more and more people chasing yields, because I bought something that has absolutely no use case. I'm not going to use it for anything, so then I needed to do something, and that something is making me more money.
Yeah. Well, yeah. So basically the points that remain when you wipe out the payment use case are speculation and yield. So speculation on the active management side, on the people with a directional view that have the kind of hard charging testosterone to say, okay, yes, it's going up today. And then on the passive side, yield. I don't know where the price is going right, in the next day, in the next week, but I know that over a year I want to own it. And so I'll just earn interest while these traders are charging around and moving prices up and down, and willing to pay me for my Bitcoins temporarily.
Sounds like CoinFlex are pretty well positioned then to ride whatever's next.
Well, I hope so, and I think SideShift as well, because exchanges have lots of KYC and sign up forms and all sorts of things, and I mean the experience of SideShift, I've been a customer since basically it launched, and the experience of SideShift is just very seamless. So there's no friction on the onboarding, and you just get an address, send coins, get the other coins, and so I mean, as long as SideShift lists lots of yield-bearing assets and flex assets and compound, and there's so many things. It's an endless sea of yield-bearing opportunities. So I think we're both positioned pretty well to take advantage of it.
Very cool. I mean, I guess we should call it a day there. But Mark will be sure to leave all the links in the description to flexUSD, all the CoinFlex links as well, and links to your Telegram and all the social media channels too. But yeah, really appreciate you coming on. This has been really cool.
Great to be here. Thanks a lot, guys.
Always a pleasure.